You have just spent $1 billion on a building with no windows. Inside are miles of cable, giant cooling pipes, and enough empty server racks to make a technology billionaire emotional. Your first customer is ready, your employees are ready, and your bank is definitely ready to collect. There is just one problem. The local electric utility says your building may not receive full power until 2029. So every light stays dark, every rack stays empty. And in the simplified example we are about to build, interest and fixed expenses keep burning roughly $230,000 every day before the facility performs one calculation, before it earns $1. How can the most valuable building in the AI gold rush become useless because of one switch? And if the electricity finally arrives, how does the owner actually make money? To answer that, we are going to follow one fictional 100 megawatt project from an empty field to its first paying customer. We will call it Northstar. And by the end, you will see why the smartest part of an AI data center contains no artificial intelligence at all. First, we need to separate three businesses that people constantly mix together. Business number one is the landlord. The landlord provides secure space, electricity, cooling, and network connections. Customers bring their own computers. Business number two is the machine hotel. The owner adds technicians, monitoring, network services, and somebody who answers the phone when a server panics at 3:14 in the morning. Business number three is the compute factory. The owner buys the AI chips and rents computing power by the hour. The buildings may look identical from the highway. The risks are not. If your customer owns the chips, an outdated processor is mostly their problem. If you own the chips, yesterday's supercomputer can become tomorrow's extremely expensive furniture. Northstar will be the landlord version. Customers bring their machines and sign long contracts for power capacity. That sounds safer. But before you can sell 1 kilowatt, Northstar must pass the 3-map test. Most bad projects fail on the map almost nobody sees. Map 1 is land. Northstar needs a large site with the correct zoning, access roads, low flood risk, room for backup generators, and enough distance from homes to control noise. You find a cheap field beside the highway. Perfect. Except cheap land is sometimes the real estate market politely saying, good luck with everything else. Map 2 is fiber. An AI data center without multiple high-speed connections is an island. Data must enter, leave, and survive a construction crew accidentally discovering your most important cable with a backhoe. Then comes Map 3. Power. Not a power line you can photograph from the road. Northstar needs 100 megawatts of firm, contracted capacity with a real energization date and enough backup infrastructure to survive an interruption. You can purchase land, you can install fiber, but you cannot DoorDash a substation. The International Energy Agency estimates that electricity consumption from data centers could roughly double between 2025 and 2030. It also warns that grid bottlenecks could put about 1 in 5 planned projects at risk of delay, and the equipment is slow too. Some large transformers can take several years to order and deliver, so the first truly scarce asset is not the building. It is Northstar's place in the power queue, but securing a connection date only gets you to the next problem. Now you must build a private power system behind the fence. From outside, Northstar looks like an unusually serious warehouse. Inside, it is closer to a hospital crossed with a power station. High-voltage electricity enters through a substation. Transformers reduce the voltage. Switchgear directs it. Batteries react almost instantly if the grid fails. Generators start if the interruption continues. Then there is cooling. Nearly every watt entering a computer eventually becomes heat. AI may be intelligent, but it has not yet learned how to stop sweating. Pumps, chillers, cooling towers, and liquid cooling systems carry that heat away. Every critical system needs redundancy. Then the redundancy receives redundancy because one backup is apparently just optimism. This is what the customer is really buying, not square feet. A promise. The machines will remain powered, cooled, connected, and protected. That promise is measured through uptime. Break it briefly and you may owe service credits. Break it badly and your customer may move. So the visible warehouse is not the valuable building. The valuable building is the invisible network of power, cooling, contracts, procedures, and people surrounding every rack. Now we can put real pressure on that promise. It is time for Northstar's money scoreboard. This is an illustrative scenario, not a forecast for every data center. Northstar costs $1 billion to develop. That is consistent with a simple construction benchmark of roughly $10 million per megawatt for a 100 megawatt project, although AI facilities can cost more depending on design. You use $300 million of investor equity and $700 million of debt. At an illustrative 7% interest rate, that is $49 million in annual interest once the debt is fully drawn. Staff, security, maintenance, insurance, property taxes, and other fixed operations add another $35 million. Before depreciation, income taxes, electricity pass-throughs, and major future upgrades, Northstar must overcome approximately $84 million every year. Now suppose customers pay an illustrative capacity charge of $180 per kilowatt per month. Actual pricing varies by market and contract. Electricity consumption is metered and billed separately, so we will leave that pass-through revenue and expense off this simple scoreboard. At 80% occupancy, Northstar sells 80,000 kilowatts. Annual capacity revenue, approximately $173 million. Subtract our simplified $84 million of interest and fixed expenses. Approximately $89 million remains before depreciation, income taxes, and future capital spending. That sounds wonderful. The building is full. The contracts are long. Everybody congratulates themselves using words like infrastructure platform. But then occupancy falls to 40%. Revenue falls to approximately $86 million. Almost the entire simplified operating cushion disappears. And if the finished building remains dark because energization is delayed, capacity revenue is zero while the $84 million clock keeps moving. That is approximately $230,000 per day. The utility email may say, "We appreciate your patience." Interest does not. This is the central contradiction. Northstar does not gradually become slightly less attractive. One delayed date or one empty customer hall can push it across a financial cliff, but high occupancy creates another illusion. A full building is not necessarily a safe building. Imagine one giant AI company offers to lease 60% of Northstar. Your sales team celebrates. The bank relaxes. Construction lenders love a large customer because future revenue appears more predictable. But now one company controls most of Northstar's cash flow. If it expands, you look brilliant. If it changes its hardware design, demands a lower price, chooses another region, or decides it ordered too much capacity, your spreadsheet becomes sick at exactly the same time your customer sneezes. The safest rent is not always the highest rent. It is rent backed by a creditworthy customer, a useful contract, and a building that another customer could actually use. That final point matters because AI machines are changing the room itself. Traditional server racks could often be cooled mainly with air. High-density AI racks may concentrate much more power into a smaller area and require liquid cooling. So Northstar installs larger pipes, heavier electrical distribution, and more expensive cooling to win the newest tenant. But then you face a choice. Build for today's machines and risk becoming outdated, or overbuild for tomorrow's machines and pay for equipment nobody needs yet. The customer can replace its computers. You own the concrete, copper, and cooling system left behind. Fortunately, the biggest racks are not Northstar's only source of recurring revenue. One of its most interesting products is small enough to hold in your hand. A bank places its servers inside Northstar. A cloud provider rents space in the next hall. The bank wants a private connection to that cloud instead of sending sensitive traffic through the public internet. Northstar installs a short cable between them and charges a recurring fee. That is an interconnection. The cable is short. The relationship and somehow the invoice can last for years. As more carriers, cloud providers, banks, media companies, and AI platforms gather in the same campus, every new connection makes the location more useful to everyone else. That creates gravity. Customers may arrive for power and cooling, but they become harder to move because their networks, partners, and private connections are already there. This is not a theoretical side business. Equinix reported more than 90% of its 2025 revenue came from recurring streams, including billions from colocation and interconnection. The lesson is important. Northstar is not simply renting a warehouse. It is selling a position inside a network, so now the business appears almost perfect. Secure electricity, fill the halls, connect the tenants, collect recurring revenue, but there is one party outside the fence who can still stop everything: the town. To Northstar, 100 megawatts is inventory. To the electric utility, it is an enormous new customer arriving almost at once. New transmission lines may be needed, new substations, new power generation, new equipment. Somebody must pay. If every upgrade cost is assigned to Northstar, the project's economics may stop working. But if those costs are spread across ordinary customers, residents may reasonably ask why their bills should support a billion-dollar private facility. Then come the physical concerns: generator testing, mechanical noise, water use in certain cooling systems, construction traffic, and a massive building that may provide fewer permanent jobs than residents expected. This does not make every data center harmful. Designs, contracts, power sources, and local effects vary enormously. Northstar can produce tax revenue, construction work, digital infrastructure, and upgrades the local grid may already need. But community permission is still part of the asset. An owner who treats local residents like an obstacle can lose years to hearings, lawsuits, redesigns, and new restrictions. A serious owner negotiates more than rent. Who constructs the grid upgrades? Who pays for them? How will noise be controlled? How much water will the design use? What does the surrounding community receive? Because the cheapest electricity on a spreadsheet is worthless if you are never allowed to switch it on. And now we can answer the question from the beginning: what does the owner actually own? Northstar does not become an AI company simply because AI computers sit inside it. It is specialized real estate wrapped around an energy contract, connected to a network, and protected by an uptime promise. The concrete matters, but the 5 most valuable assets are almost invisible. 1. An energized power commitment, not a request, not an optimistic announcement. Power with a quantity and a date. 2. Redundant infrastructure, the equipment and procedures that keep one failure from becoming a customer outage. 3. Connectivity, multiple fiber routes and access to the networks customers actually need. 4. Transferable contracts, strong customers, useful terms, and a building that can survive if one tenant leaves. 5. Permission, zoning, utility agreements, environmental approvals, and a workable relationship with the community. This creates 5 questions an investor should ask before becoming impressed by a giant number on a press release. How many megawatts are contracted, not merely requested? When will those megawatts actually be energized? Who pays while the building is empty? Can the next customer use the facility if the first one leaves? And who pays for the infrastructure outside the fence? If those answers are strong, the gray box can produce years of recurring cash flow. If one answer is weak, $1 billion can sit in the dark. After years of permits, construction, contracts, and delays, a utility worker closes a breaker. Northstar's control room wakes first, then the pumps, then the cooling system. Finally, row after row of customer machines begins to glow. The owner watches the first electrical load appear on a screen. Not one AI answer has been sold yet, but Northstar has finally started earning money. That is the final head fake. The gold rush may be artificial intelligence, but the business underneath it is power, property, networks, and promises, and the smartest asset inside the entire building is the one that makes sure the lights turn on.